Market status, closed, closing price, $2.55 USD. Daily movement, plus 81 cents, plus 46.55%. Date, Friday, November 21st, 2025. You are looking at a chart that defies gravity, logic, and arguably sanity. Datavault AI Inc., ticker symbol DVLT on the NASDAQ, has not just moved, it has detonated. Closing the last session at $2.55, we are witnessing a 46.55% vertical tear in a single trading day. If you are holding shares, you are likely euphoric. If you are on the sidelines, you are confused. And if you are short, you are likely in a state of absolute panic. But the number on the screen is just the surface. What is happening beneath the hood of Datavault AI is a mechanism so specific, so psychologically manipulative, and so structurally dangerous for bears that we need to stop looking at the price and start looking at the calendar. Here is the expectation versus the reality that is currently trapping thousands of investors. The expectation is that this is just another microcap AI pump, a company slapping AI on its name to catch the tailwind of the sector, spiking on some vague press release about future synergies before inevitably crashing back down to 50 cents. We have seen it 1,000 times. That is the safe, cynical take. But here's the reality, and it is the reason you cannot look away. Datavault isn't just rallying on AI hype. They are rallying because they have weaponized the one thing retail traders love more than growth: free money. The company has announced the distribution of Dream Bowl 2026 meme coins to eligible equity holders, with a record date set for November 25, 2025. That is imminent. This is not a standard dividend. This is a digital asset airdrop that creates a logistical nightmare for short sellers. When a company issues a crypto dividend or a spin-off asset that cannot be easily borrowed or bought on the open market by a brokerage, short sellers are often forced to close their positions immediately to avoid defaulting on the obligation to deliver that asset to the lender. This is what we call a forced recall scenario. The violent 46% move you see is not just buying, it is the sound of shorts rushing for the exit before the record date locks them in. Let's break down exactly what happened in the last session, because the volume tells a story that the price hides. The stock traded 139 million shares. To put that in perspective, the average daily volume for DVLT is usually around 50 million. We saw nearly 3 times the average float rotation in a single session. This kind of volume indicates that we are not just seeing retail traders on the Robinhood app clicking buy. We are seeing a structural repricing of the asset. The stock opened at $1.73, dipped briefly to $1.71, trapping the early bears, and then marched relentlessly to a high of $2.72 before settling at $2.55. When you look at the charts on your Fidelity trading platform or Interactive Brokers trading screen, you will notice a massive gap up. Gaps like this are usually filled, but dividend run-ups operate on a different set of physics. The pressure is artificial and time-constrained. The closer we get to that November 25th cutoff, the higher the tension mounts. It creates a game of musical chairs where the music stops on the record date and nobody wants to be left without a seat. However, if we strip away the meme coin narrative, which, let's be honest, sounds like a gimmick to many serious investors, is there an actual business here? This is where the story gets surprisingly dense. While the retail crowd is screaming about meme coins on social media, the institutional eyes are looking at a press release that slipped out quietly alongside the hype. Datavault just raised its fiscal year 2026 revenue guidance to exceed $200 million. Previously, that guidance was sitting at $40 to $50 million. Do you understand the magnitude of that revision? A 400% increase in forward guidance is not a rounding error. It is a declaration of war on the current valuation. If a company like Apple stock or Tesla stock raised guidance by 400%, the entire global financial system would grind to a halt to process the news. For a microcap like DVLT, it suggests that they have secured contracts that are not just promising, but contractual and transformative. The driver of this revenue explosion appears to be their pivot into real-world asset tokenization. They recently signed a multi-year agreement with Triton Geothermal. This isn't just a consulting gig. It involves an upfront payment of up to $8 million and, more importantly, a 5% participation fee in Triton's future token transaction fees. They are effectively building a royalty model on top of industrial data. This moves them away from the volatile, capital-intensive world of pure tech development and into the high-margin world of licensing and royalties. Now pause for a second. I want you to look at your own portfolio or watch list. Comment below with how many shares of Datavault you are currently holding, or if you sold into this massive green candle. Are you playing the meme coin dividend, or are you actually buying the $200 million revenue story? I want to see the ratio of speculators to investors in the comments. Let's get back to the mechanics of this trade, specifically for those of you who might be managing your own money via Schwab Intelligent portfolios, or perhaps taking a more active role through SoFi Active Investing. When you see a stock move this fast, your brokerage's risk management algorithms start to twitch. If you are trading on margin, the maintenance requirements for DVLT have likely spiked to 100%. Interactive Brokers is notorious for clamping down on marginability for stocks undergoing corporate actions like this crypto dividend. This means buying power is being squeezed, yet the stock continues to rise. That is a bullish divergence. It means people are buying with cash, not leverage. Cash buying is sticky. Leverage buying is fragile. We also need to discuss the Datavault aspect of their business, the actual product. We live in an era where data is the new oil, but refined data is the new gasoline. Datavault AI claims to specialize in the valuation and monetization of this data. Think of them as an appraiser for digital assets. If a company has terabytes of user data, that's an asset, but it's illiquid. Datavault's technology purportedly structures that data so it can be valued, traded, or tokenized. In a world where every company is trying to figure out how to feed AI models without getting sued or giving away value for free, a data valuation service is a critical piece of infrastructure. However, we must apply a critical lens. We have established the expectation, meme coin pump, and the reality, massive guidance raise and short squeeze. But what is the risk? The risk is execution. Raising guidance to $200 million is easy. Booking $200 million in cash is hard. The market is littered with the corpses of companies that promised the moon and delivered a pebble. The company reported a net loss recently, despite the revenue growth. They are burning cash to grow. While the Triton deal brings in cash, the company's operational expenses are likely to balloon as they scale to meet that $200 million target. Furthermore, let's talk about the meme coin itself. This is a double-edged sword. On one hand, it drives the stock price up in the short term. On the other hand, it attracts a specific type of investor, the get-rich-quick crowd. These investors are fickle. The moment the record date passes, the second they are guaranteed their coins, they often dump the stock. We see this with special dividends all the time. The stock runs up into the date and then crashes the morning after the ex-dividend date. If you are buying DVLT right now at $2.55, you are betting that the real-world asset story is strong enough to absorb the massive selling pressure that will inevitably come from the dividend capture traders dumping their shares next week. If you are a conservative investor who typically sticks to Fidelity mutual funds or Fidelity ETFs, this stock probably looks like radioactive waste to you, and you wouldn't be wrong to be cautious. The volatility here is extreme. But for the active trader, the volatility is the product. The range between the day's low of $1.71 and the high of $2.72 offers more percentage opportunity in 6 hours than most blue-chip stocks offer in 6 years. There is also a macroeconomic angle here. We are seeing a resurgence in the Web 3.0 narrative. For a few years, anything related to crypto or tokenization was dead money. But with major institutions now exploring tokenized bonds and real estate, companies like Datavault that provide the plumbing for this transition are getting a second look. If Datavault can successfully position itself as the oracle or the auditor of tokenized data, the $200 million revenue target might actually be conservative. Let's look at the specific price levels you need to watch when the market reopens. The $2.72 high is now your resistance. If DVLT breaks $2.75 on volume, the next psychological level is $3. But the more important level is the support. The stock needs to hold